Good morning, traders. It is Thursday, September 25th, 2014. There's always a pause there between the day and the date. It's 8:01 a.m. Central Time, Chicago time. Thanks for joining me as always. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A reminder that risk disclaimer is a requirement at the beginning of every broadcast, and that's why I do it, in case you're wondering why I keep reading that same thing. Let's start out with what the overnight session has brought on as far as fundamental or geopolitical news. Key element here, the ECB's Draghi says he's still determined to counter risks to medium-term inflation outlook, ready to use further unconventional tools or change size and composition of measures if needed. Unacceptably high unemployment and weak credit may impact the recovery. Risk insufficient structural reforms. Recovery has lost momentum recently, expects modest growth in H2, second half of the year. And what that's doing is it's pushing the European treasuries higher. As an example, the Bund futures continue to extend gains, basically pushing towards the all-time high here at 149.89. It's currently trading 149.26 with a high of 149.31. It's a big deal. So what you have is a flight to safety, which means money is likely to come out of the indices, and that's what we're seeing. The Bund futures continue to extend gains with December contract looking to test weekly high at 149.25. This also is a result of month-end, quarter-end demand. On the U.S. side, Fed's Evans, a non-voting dove, says very uncomfortable with calls to hike sooner versus later. Fed should allow a modest overshoot of 2% inflation. Basically, Fed's Evans is suggesting that the Fed should let inflation climb over 2% before starting to hike, giving the economy more time. Fed's Mester, a voting-leaning hawk, reiterates wants the Fed to drop considerable time language, but his opposition is not enough to trigger a dissent. France has confirmed that a French national had been killed in Algeria by a group claiming allegiance to IS. Remember, IS has called for the death of any US, European, Australian, and so on out there. And then on the US, again, the US front, as far as economic releases, we have the US initial claims came in at 293,000 versus 296,000, slightly better. Continuing claims 2.439 million versus 2.440 million. On continuing claims, also slightly better. U.S. durable goods came in slightly worse at negative 18.2% versus negative 18.0 expected. And then looking ahead, by the way, BOE's Carney is has been talking for about the last 20 minutes. So if you're trading the British pair, pay attention there. Looking ahead, 15 minutes after the open at 8:45 Central, all times are central. U.S. services PMI is expected at 59.2. Then at 9:30 we have EIA natty gas at 96 billion cubic feet. At 10 o'clock we have basically a low importance number. Kansas City Fed expected at 6. And then at noon, we have a 70-year note auction at 29 billion. And then at 12:20, we have Fed's Lockhart, non-voting dove, speaking on economy in Jackson, Mississippi. So that's what's on deck for today. Let's take a quick look at the charts. It takes about 5 minutes to get through the fundamental stuff or the news stuff. So yesterday, let's quickly run through what the market has done here and look at what the story is so far. It's really important to stay abreast of the story. and make sure you understand what the market's objectives are and how good of a job it's doing. So remember the gap here from the 19th, it starts our micro composite up here. We take it back to the gap. The gap low is 1962.75. There's a gap low here. You'll see it on my other chart, recorded as a gap in a kind of a purple color. And the gap zone is down to 61, with the gap close at 59.75. So any attempt to push through this area, I would not try to buy these levels. This area, no matter what the composite or a prior template day shows me, I will not fade a gap, a market entering a gap, because it's a completely unauctioned area and the market's likely to test the other side. Generally, if it's going to stop, it stops midway. But this is a very small gap. So what the market's done is it's pushed to new highs 2002, pulled back to 1969.50. Really nice measured move set up here that gives us prices way up there. I have not put it up yet because the prices I think are in the 2050s, 2040s, something like that. But they're coming. And then what we did is we pulled back to 69.50, had a really strong up day, which we used as a template for Tuesday's trading, which was just really a perfect day, perfect execution day. We had our Fed day, which is this big doji here, and then the market continued to climb to 2012.75, pushing through our 2012 measured move, and 2 ticks short of the other side of this zone, another 200% measured move at 2013.25, and it has tumbled for 3 days in a row. Yesterday, coming in, the expectation, if you looked at yesterday's Trader Bite, as always, those videos are available for you to watch before the market. I had talked about the expectation for responsive buying, and the responsive buying would target 88 as the key area to test above, and then potentially to get into the 90s. So what happened yesterday? We had an opening swing. Let's back it up. Right there. So the market opened in range out of value. The prior day had decent value. And we have a quick test of 79.50, a push down to 72.50, double bottom, pull back to the mid, expecting lower. And what the market does is it pushes down and goes lower as expected here. Double bottom, weak low against the prior day's close. Expectation is to go lower, and it did. And then here we are. The next level down would be 71.50, the prior day's low. This is a short time frame level. And then they pushed to 71.75, and then they found buyers in this area back to the mid, and then finally broke through. If you note here, the lows are being done on a very very poorly, or on a very weak push. I do not see sellers coming in and pushing prices lower, and buyers are not backing off. So you have a double bottom, then it takes it out by 3 ticks, and then it comes back and it takes it out by 3 ticks, and it comes back and it takes it out by 2 ticks. The market's trying to create a trend. Once the market crosses through the mid and gets back into the OS here after this low, the expectation is for new highs. So now, instead of what was expected as a main hypothesis for the day, which was to open, to test lower, and then push up, a slight test lower, and then push up with the initial target at 82.50, secondary target at 83.25, as discussed, tertiary target at 85.75. Then we have 87.50, 86.75, 87.50 cluster with 88 on the back end. This is a prior day. This is where we found sellers on Tuesday. And so the market actually pushed lower than I had expected in my plan. So I started to look at hypothesis or plan number 2 as a potential for a break lower to target 1962.75 gap and threw down to 59.75. As soon as it crossed over, then hypo 1 was back on the table, and that's the side to trade from, the long side. The fact that it's pushing, the biggest rotation on the day here was six and a half, and then you have a pullback that reset the rotation value. But if you look at the 70.50 up here till 78.50, that was in fact the largest rotation here at 8 points. Small, very shallow pullback, could not get the open, so the IB's in trouble. We stopped 2 ticks ahead of the IB, and then the IB was taken out. Target 82.25, and there it is, 82.25, and then the secondary target was 83.25. There it is, and it's a very, very strong push. This is a motivated buyer. The delta is on their side. You can see the delta here. The offers being lifted, very strong. So expecting a pullback and continuation higher. So this is the pullback here. It's flagging, and there's the continuation higher as the market resolves this impulsive move with a pullback and then a continuation move. This is normal. Finally pushes through and actually gets a lot farther than I expected for a buying day, and then the market shifted the point of control from right here at 83.50. Remember 83.25, and remember yesterday how I said that the market spent most of the time with the point of control at 83.25. Here it is again, 83 and 83.50, 83.25 area. A lot of volume at 83.50. This number comes to us from the Fed day, and it finally shifts it up to 91.50. The way this closed, and I put this on Twitter late yesterday, the way this closed leads me to believe that the continuation move is incomplete. The market essentially ran out of time to continue to push. There's enough volume here and enough energy to get another push through to the upside. However, that was wrong, and as you probably noticed, I do not mind admitting when I'm wrong, because I'm not here to prove anything. I'm here to just trade. It basically opened just where it closed, and it went to 91.50, which is the point of control, multiple times before it led up and came down to the LVN from yesterday overnight. Tried again and again, 91.50, incredibly poor high, and then we have this drop that came in once the initial claims and durable goods came in. This drop happened. I looked around. There's a fair amount of delta here. This is an impulsive move down. I looked around to find out why this is happening, but I do not know. But what we have here is a poor high yesterday with a point of control at the high. So there was plenty of energy to push the sellers through. Remember, for every contract that's bought, a contract is sold. So there are as many people who are long as there are short here, and given the trend and given the location of the point of control, the fact that it's shifted up like this, the normal course of action is for the market to continue higher, and it just could not. But it left behind a very weak high, so the expectation is this would be taken out either today or in the next session or so. Right now, the market's pulling back to 84.50, staying against the lows below the point of control, so the short-term inventory is short, or the overnight inventory is short, and moving back to 83.50, and that's the area I'm going to watch on the open. This does not look like what would be expected from the auction that we left behind yesterday, and I wanted to point it out. So, with that being said, it is interesting to see what the story is here. I need to erase this level. What the story is here, but my expectation for today, before the overnight session, when I was doing my homework before leaving yesterday, the expectation is that the overnight would extend the range higher, chop around in this high volume node, high volume area, and then eventually would come in the morning. It would likely pull back to 87.50 in the morning. That was what was expected. 87.50, find a base against the LVN, the 87.50, 88 prior high, and then start to move up with a key target at 2025. 2025 is the Fed high. And that would take out the prior sell day. If you look at what's on top of that, it's very thin. And if you recall from Monday, 2003 is a big area for the market to take back, for the buyers to take back. Right now it's trading 85 quarter against 84.50 low. The expectation is the overnight low will be taken out. Remember, inventory short. Unless there is still a driver in here, the expectation is that the market will will find responsive buyers back up to 91.50. But given the situation and the way this is traded on the overnight session from 7:30 onwards, Central this morning onwards, I'm going to back off the primary hypo that we would get responsive buying right away. I think this is likely to resolve itself back down towards 83 quarter and float down a little bit before it finds buyers to come back up, if it is going to come back up. With the situation that it is now, 87.50 presents our initial resistance point. 91.50 presents our key target above, and then the bigger targets would be 96.50 and 2,000 and a quarter, and the big target, the key targets to the main target up top is 2003, but I'm not sure if we have that in our plan here for this session. It's only 8 points up, but this is really trending down, and seeing the Bund here pushing against all-time highs tells me that liquidity is moving from risk on to risk off, and that's their money's being moved into treasuries for whatever reason. So that's how it's shaping up right now. The secondary plan, if it does not find a base and turn up, the secondary plan is that we do get responsive buying early, we run into resistance and we fall through and we start to move lower. Now 81.75 was the low before the last leg up, and to me it seems like if we start to break through 81.75, 81.50 will probably bring in pretty good sellers back down to 76.50, 72 again, and then potentially new lows. This is a wide-ranging day yesterday. It's the widest ranging day in a while, at 22 points for the day session. This is a pretty good bullish engulfing pattern here. It went and tested the prior day's low and took out the prior day's high. It was very, very bullish, and we're opening in the middle. So with that being done, with the range being that wide, it is very likely, more likely than not, that the market will be stuck in range today, resting and building a bulky profile. So today is not a day like yesterday where you would commit to a trend type trade automatically. I think today is one of those days where you sit and watch and look at, are they respecting prior day levels? Are they respecting short-term levels? If they're not respecting short-term levels, then you have to assume that the intermediate term player is in control and a trend could be forming. But overall, the expectation is for the market to test lower, find responsive, get stuck here at 87.50, and fight this 91.50 area with the weak high. But overall, I expect the market to be stuck in this area, if not skewed to the upside. That's the main idea for today. The expectation by the end of today is that most of the trading is going to happen in this area, is likely to happen in this area with a slight high to follow, but not by much. Okay, so that's what I'm looking for. I'm going to watch carefully how things work out on the open. I wanted to talk about crude oil for a minute. Crude oil had a very interesting break yesterday. This is a 60-minute crude oil chart, pit session only, from the 28th of August of last year. This is a pretty good breakout bar on pretty good delta, and the crude oil is moving back into the next, has moved from the composite point of control of 91.68 right here, 91.70, and is moving away from it, and it looks like it's targeting the next microcomposite area, which is 94.11. This looks to me like a very good base for crude to start to rally again. Remember, the U.S. is bombing the heck out of oil assets that are under ISIS control in Syria. That may be the reason for this. I'm not really sure, but the way this is shaping up, it looks like it's returning back up and retesting the upper HVN here on the microcomposite. The midpoint of this entire range from 104.96 to 84.96 is 94.96, 94.96, and that's just it's just over the hump here, and it looks like it's likely to keep trying to move that way. Early on, if I switch to, I'll switch to a 15-minute here. Early on in the session, expecting because of the way it's opening, it's gapping open, OAOR type open. The expectation is for it to be responsive back, and it could go as low as 92.50 before it finds a base. It's really important today for buyers to step in and show that they perceive value to be higher still at 94.10. And if we don't see that, then it's likely to chop around and accumulate energy, accumulate volume before it continues higher. On a short-term basis, this product is, again, OAOR on the open. Looks like the opening swing is 93.46 to 93.20. Yeah, 93.20, and is breaking lower. So it is already acting responsive, but I expect it to find support in the 92.50 area if it drops that far, and I expect a continuation higher since this was an impulsive move. Okay, so that's that. Let me leave you with that and get you back on the market opens in 6 minutes. Watch your risk today. It's not wise to give away much more than you have to for any particular day or trading idea. It's a key element of your trading plan. Obey it. Good luck.